Hi, welcome to my channel, or welcome back if you've been here before. My name's Aisha, and in today's video I'm going to be talking to you a little bit more about the 95% mortgage guarantee scheme. I mentioned this scheme in my previous video on, it was like a 2021 update. I'll leave the link up here for you if you want to check that one out, but I didn't have as many details as I do now. So in today's video I'm going to talk to you a little bit about how the scheme maybe works and who can apply for it. Before I go any further, don't forget to hit that red button and subscribe to my channel so that you can get all of my future content. Thank you to everyone who's subscribed so far. I'm almost at 1,000 subscribers now, so thank you very much. Also, don't forget that I'm not a mortgage broker or a financial advisor of any sort, so the information that I give you in these videos, they're just a tool to help you to just highlight information which you can then go on and do more research for yourself. If you need to speak to a financial advisor or anything like that, then make sure you do that so that you can make the best financial decision for you and for your situation. Okay, so the mortgage guarantee scheme started on the 1st of April, so it's quite a new scheme, and that means that at the minute any information that's out there is only just theoretical information. Nobody's actually used the scheme yet properly. I highly doubt that anyone has bought a house, got a mortgage and everything and done the whole process within 7 days, so no one's actually properly used the scheme yet. So you're not going to be able to find anyone out there who can give you their own experience of using this scheme. So the one thing I would say at this point is that if you're going for this kind of a mortgage, then make sure you read the small print properly, because you want to be aware of anything that might be in there. I know that with some of the other schemes, like maybe the Help to Buy scheme, the shared ownership scheme, a lot of people got caught out later down when they didn't realise exactly what they'd signed themselves up for. So make sure you read anything. You should do that anyway. It's not something that you should just take lightly when you're getting a mortgage, buying a house, and you're spending large sums of money. You're supposed to read everything clearly, and if you see anything in the documentation that you're not sure about or you need further clarification on, then that's when you can ask a mortgage broker or a financial advisor for any help if there's anything that you're not quite sure about. So the whole point of this 95% mortgage guarantee scheme is to encourage banks to go back to offering 95% mortgages, because before the pandemic there were 95% mortgages available. They were freely there for anyone who wanted to and was eligible to apply for that mortgage. They could get it. As soon as the pandemic struck, most lenders pulled their 95% mortgages, and then people had to buy a property with a 10% deposit, a 15% deposit in some circumstances. So I explained in a previous video, when I sold my house, the buyer for my house originally came with a 10% deposit, but then they asked him to actually get a 15% deposit. So some banks were being really strict, because the higher the loan to value, the more risky it is for the bank. So because the lenders are unwilling to take that risk on, the government has stepped in and said that they will guarantee some of that mortgage. Most of the banks have committed to bringing back their 95% mortgages, so Barclays, Santander, Lloyds, Halifax, HSBC, all of the main ones. You'll start to see their 95% mortgages popping up as of this month. You can use this scheme regardless of whether you're a first-time buyer or not, and you can also use it regardless of whether you're buying an older building or a new build property as well. But as with any of the schemes, there are obviously rules that apply. The first rule is that you have to be buying the property to live in, so it can't be like a buy-to-let property, it can't be a second home. I've already explained in previous videos anyways that a buy-to-let property, you generally have to put 25% down as a deposit, so it has to be a residential property that you are personally living in. The value of the property can be anything up to £600,000, which is quite a nice amount. The third thing is that it needs to be a repayment mortgage, so it can't just be an interest only mortgage, which again I've explained that usually residential mortgages are a repayment mortgage, so that loan amount, every time you pay your mortgage, that amount goes down. Whereas if you were getting a buy-to-let, for example, you can opt to have an interest only mortgage where your monthly payments are lower, and it just means that you're paying the interest every month, and so that original loan amount just is still there. So number 4 is that it has to be affordable for you, and I'll leave a link to a previous video up here where I show you how you can find out how much you can afford to spend on a property. Number 5, you have to pass all of the standard checks, so your credit score checks and making sure that you can actually afford a loan and that you're eligible for a loan. Another rule is that the mortgage you're applying for has to be between 91% and 95%, because as I've mentioned in a previous video, you can put a little bit extra. It doesn't have to be just a 5% deposit. If you want to put a bit more in, you can. So it has to be between 91% to 95% of the value of a property, and the guarantee only lasts for 7 years as well. The last thing is that the 95% mortgage guarantee scheme is running up until the 31st of December 2022, and so you have to apply for a mortgage in that time if you want to use that scheme. But like with any scheme, they could extend it if they wanted to, but that's the key date that you need to be aware of for now. Okay, so how does it work? Or at least this is my understanding of how it works from what I've researched so far. The government have agreed to guarantee the portion of the mortgage that is over 80%, and so if you get a 95% mortgage, they will agree to guarantee 15%. If it's 91%, which is the minimum amount that you can borrow using the scheme, then the government will obviously guarantee 11%. If homeowners who use this scheme don't pay their mortgage on time, or if the property needs to be repossessed because they haven't paid their money on time and there's going to be a loss for the bank, then the government will share in that loss with the banks. They will compensate them according to the amount that they've agreed to guarantee. But as I've said before, not paying your mortgage is one of the things that you shouldn't do because it can have really bad consequences in terms of your credit score and things like that. So it's best to prioritise mortgage payments over other payments for other things. So the good thing about this scheme is that it means that 95% deposits can make a comeback, and that means that people can start getting onto the property ladder or move on up the property ladder using a smaller deposit if they don't have the 10% or the 15%. So something to be aware of, which I've mentioned in previous videos, is that the higher the loan to value, so with a 95% mortgage, that's obviously the highest proportion that the bank is willing to pay, then the interest rates are going to be higher because it's more risk for the bank. I think that the government have structured this guarantee in a way that banks can't take advantage of that, because obviously if the government is saying they're going to take some of that risk on, then the interest rate shouldn't shoot up too high, and I think they have to agree to make sure that the loan is fair, and also they share in the loss if there's any loss when people don't pay their mortgages, so they shouldn't be able to take advantage. But as I've said in previous videos, it might be better, and again you have to talk about this with a financial advisor, it might be better to pay the 10% deposit instead of the 5% if you have that money available. If you don't, then you don't, but if you do, then you might get a better rate on your loan, which means that your monthly payments will be a bit lower. Another thing to be aware of is that the bank has to offer 5-year fixed rate mortgages with this scheme. I'm not sure if that means that if you're using the scheme you have to have a 5-year fixed. I don't think it means that. I think it just means that that has to be one option, which that just means that over the course of 5 years you'll know exactly what you're paying. But when you apply for a mortgage, they will give you all of the different rates that are available to you, and you can decide which one is better for you. A fixed year rate means that you have to do that term as a minimum, and if you don't, so say if you took a 5-year fixed and then within 3 years you wanted to sell your house and pay off the mortgage, you would be asked to pay an early exit fee to the bank. So it could be a couple of £1,000s as a penalty for paying it off early. You could do what I did when I moved from the flat to the house though, and you can put your mortgage onto another property, so it's not you paying off the mortgage, you're just transferring it to another property, and then that gets you out of having to pay the exit fees. As I said earlier, the mortgage guarantee scheme lasts on a particular mortgage product for just 7 years. The idea is that over the 7 years that you've been paying off your mortgage, it's a repayment mortgage, and so the amount that you owe to the bank is decreasing each time, and so again the risk is decreasing each time, and so after 7 years you shouldn't need that guarantee, because you should have like a 10% deposit in it or a 20% deposit even in it, because of all of the equity that you've been building up. I think that's pretty much it for this scheme. From what I can see, it seems pretty decent. It just seems pretty normal. It seems more like an agreement between the bank and the government rather than the person who's buying the house having to worry too much about it. And if that is how it is, then that just seems good to me. It seems okay to me. But like I said, with everything you need to read the small print, make sure that you understand everything you're doing, ask a financial advisor or a mortgage broker, and just be very clear on what you're doing, because it's large sums of money that are involved with buying a property. Don't forget to hit the like button. Also leave a comment down below, let me know what your thoughts are on this 95% mortgage guarantee scheme. If you have a friend or two that you think might benefit from this video, then please don't forget to share it with them, and don't forget to subscribe if you're still hanging around without hitting that red button. Take care of yourselves, and I will see you in the next video.